Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday, the 28th of January, 2020, about 1:25 p.m. Central Time. So if we look at the ag markets, didn't really go anywhere today. They're still lower. Part of the problem, we're not hearing any new Chinese business. Part of the problem, obviously, the Wuhan coronavirus issue, wondering just where everything's at. Yet, we had the Tuesday reversal in stock indices. I can't tell you that's where they'll finish because they still have an hour and a half to go, but looking pretty good. Metals, a big reversal to the downside. The dollar holding up. The safe havens falling in the some of the other areas here. Let's just see what we've got. We got the energy markets trying to be up a little bit. I was actually looking for the notes. There we are. Down 11, bonds down nearly 31 on the day. So mixed day, a pause. That is the right way to look at it. Now, the question is, where do you go? Let's go to the charts for the ag and get a feel for where this is. You're still losing ground. You're down 6.5 cents on a weekly basis on a close. So you're under this 18-week moving average by right now in the neighborhood of 20 cents. Still moving yourself down. No export business to speak of. We haven't heard of Chinese buying of our soybean products. When you look at the daily chart, the pause is right here. You can see you've got an inside trading day from yesterday. And where are you pausing? You're pausing at this point right against that low area that I was showing you last time, and that's that area right over here. You carve through this low. When you got into this under the 905 zone, you went through that low. So the next one's this 880, 85, 90 area, right through there down to here. That's how I'm looking at it. What else is happening? We've talked about the fact that you're probably going to get a bearish crossover in the shorter term moving average, the 18-day moving average getting under the 100. They're the same number today. They're going to cross over tomorrow. How do you know? Because you're going to lose one of these days, the 18, and replace it with this over here. So it's going to cross over. It still tells me that rallies back up to that number. That's going to be the potential for a resistance area. And remember, this number is going to start following price closer than the 100-day just because of the weight of the two averages. One's using 100 data points, the other 18. The market did what I was hoping it would. It moved to the right-hand side of the Bollinger Band. Now, the importance of that is markets rarely stay in straight lines underneath this band more than 5 days in a row. It can happen. There's no magic to it. Go find it is what I'm trying to point out. Now, the fact that it even did as many as it did and just bounced that much is not a sign of bullishness. It is still a sign that this market's very weak. How overdone is the market? Well, if we look at the slow stochastic, you know what I'm going to tell you. This rules the day when it locks in like that. And the fact that this market has just gotten what I'll call a dead cat bounce here, just bouncing up a little bit, not very impressive. I would say that the trade is waiting to see if you get into this area here of some free space, some air, and it's probably still going to probe the short side of the market. When we come to the meal market, if you look at the meal and you take a look at the slow stochastics, one of the numbers finished over 20 today. So now I go back and I say, well, what about the others? Well, the day before this was at 20. So you never did embed. You just got oversold, and that's where you're at this point. Just an oversold market in a downtrend. Resistance back up at the 18-day average at 300.8. But to get there, this last rally high was 300.5. So you'd say, what about that? Here's what I'll tell you. Let's go back another day. And on this day, we're at Thursday of last week. Number was 301.50, 301.40, 301.20, 300.8. So you're only losing 20, 30 cents, maybe 40 cents a day. That's the point that I'm making here. And with that, you'd have to be watching to see what it does. I still think it's a resistance zone, but it could step out of the pattern of lower highs, lower lows. In the soy oil, you were under the Bollinger Band, and you whipped back to the right-hand side. Now, what did I say yesterday? I probably would have said that the initial resistance, when you look at this, would be back to the 100-day average because you have an embedded reading. You haven't quite got there. I wouldn't be surprised if that's it. I'm not blind. I see the vacuum in these markets all the way down, but the problem is When you have the embedded reading, until it's lost, you don't know where you're at. Now, if that number gets over 20, you don't want to be looking at resistance points down here. You want to start looking wherever that 18-day average is if that occurs. The word is if it occurs. In the corn market, we went down yesterday, went to the lower band. You know what I'm going to say. Be it on the upside or a downside, the first time you hit the band, I think, and that's what I teach in my charting course, that the pros step out a part of their positions against that. Now, you'll say, well, how do I know they're short? I look at it this way. When you're under the 18-day average, the bias is down, and I have to assume the algorithms and other parts are trading with that. When you're over it, the bias is up, and again, I'm making that assumption. You may say, it's a big assumption. Okay, but it's what I assume. Now, neutral to me is the 18-day average to the 100, because if you will, moving average traders and the algos and all, they'll look at that. And that's why the market, went there. I don't know why it stopped there, but I'm guessing that is the reason that it stopped. Are we trending? We are not. You have a higher high, lower low. Now, I know our firm has been saying they didn't think there was much downside under 375 because the farmers aren't selling the product. And there's been question of the product that we still have, the grading of it, how good is it and how much demand is there for it. And they're saying, yeah, our stuff's pretty good. They're not going to let go of it. In the wheat market, you fell just enough yesterday, and I'm going to come to that. This is how the market looked Thursday, Friday. If you take out this low, what you do is you break the pattern of higher lows, higher highs. However, you're always looking to see where the line in the sand, the 18-day average is. It's there. I realize people start panicking. Could it go to the lower band? It could. We don't know, but we know that that's the first neutral spot. And I teach it over and over that when a market gets up, often it'll pull back to that zone or under it, back up to that zone. So now I'm waiting to see what it does. Today the market makes a higher high. What would turn this market bearish is if yesterday's low of 559 were taken out, because then you could end up with lower highs, lower lows, under the 18-day average, and momentum's already turned down. What the bulls have to defend to build a position is not let that happen, and defend if they want the market to go back into a bullish formation, try to hold that 18-day average. That's what I think. We were talking yesterday. This is how the market came down. You had lost an embedded reading. This is an embedded reading. It's when the K and D lines are both going sideways over 90. When it's lost, prices often are signaling that they want to get back to that neutral number. I'll call it the 18-day average. And it's a combination often. If was bullish embedded, often that 18-day average, because it's a lagging indicator, is still going to be climbing a bit, but price is a current number, and it can run at each other. And that's right where you're at. What did it do? It kisses it. Bang. Up from there 50 some odd points, because that number was 1410 and you finished 1454 with a high of 1475 today. You made the lows first and then you went up. Again, that line in the sand, the warning number, the traders often step back. But are you trending? You're not. You got a lower low, higher high, and you have a market that is still in overbought territory because both numbers that make up the oscillator, the slow stochastic, are overbought. The coffee's been in a forever bear market. I started talking, it was probably around here, that I was watching a TV show. I don't know if it was 60 Minutes or one of them, and they were coming out and talking about a plant-based coffee. And I said, wow. And the host was sampling it. And I'm going, plant-based coffee. Now, I'm not saying it's going to be less money than regular coffee or not. But since that story, I can't get it out of my head, this market hasn't been able to rally. I'm not saying the two are tied together, but I just can't imagine. That company was a startup based in Seattle, if I'm correct. Can you get to the lower band? You can. Do you have the embedded reading? You do. I see the resistance being the 100-day average of closes. If the market were to take out 113.70, then the 18-day average, wherever that comes in. But if it did that, I'd be looking hard to see, do you keep that embedded reading? This doesn't stay forever embedded. That's my point. You've come from 140 to today's low of 104.90. That's a 37-point drop. In round figures, what is that? It's almost 30%. That's quite a bit. In the cocoa market, you lost here too the embedded reading. When you lose an embedded reading, the signal comes in there. If you don't get it back right away, I look for price in the 18-day average to make a run at each other. In other words, no, it's not a buy signal. It's a get out of Dodge signal. The market kept coming down today. You can see where you're at, down to 2703, 2651 is the 18-day average. This number is going to climb a little tomorrow. We'll see if they can make their run at each other. Cotton market, you tell me what you did. Lower highs, lower lows. If you go to the Bollinger Band on the bottom for support, what do I say? That's where I think the pros come out. If you rallied the resistance, it's right where you've been going. You've been hanging every day, hitting that 18-day average, that line in the sand. But going home, you had lower highs, lower lows, momentum pointing down. Had it not been for this virus thing, I should have been bolder. But you get scared when you know this. You don't know which markets are going to do what. So this market today, bang, hits the number. That's yesterday, I'm sorry. That's Monday. Remember, you had to go over the weekend to take that home. Lower Bollinger Band, I'd be screaming at my clients, you've got to cover some of your position. I don't care if you take it all off or not. It's the first challenge. And if it rallies, where's the resistance? Well, I'm going to argue back at the 18-day average. To negate this downtrend, you've got to take out right up here, the 7,100 level. The market closed over the 18 days, so it looks to me like you're going to have the bias up, you've hit a downside target, and momentum has flattened on you. In the cattle market, how many days do we now have under this lower Bollinger Band? The market's at 120.70. That number is 121.92. So you're under it here. You were under it this day, 121.32. Well, that's not true. They're both, what's the Bollinger Band there? It's got to be under it, and it's under it there. You have 4 days in a row. That's what it is, under that number. And as I'm seeing it at this point in time, that is, I'm looking at these numbers, you're probably at a zone where the market can get a little bit of a move to the right-hand side at any point. But you've had a breakout of all this sideways action down. Most of the newsletters I was reading, I have to tell you, in the sideways action, we're talking the market was going to go up. I saw one that didn't. Guess which one? Price counts. And they had said, watch out here, this market's not favorable. Same thing in the feeders. You've got a string of days under that number. You could get to the right-hand side of it for no reason at all other than you've got that string of numbers. And in the hog market, let's go back to Friday. This is the market going home. Obviously, everybody's nervous about what's going to happen with the Wuhan coronavirus. Market, if it drops, the first challenge of a lower Bollinger Band, especially after being neutral, could be in play. It is in play. You closed under it today. You're just getting back over it. It's not a dramatic turn one way or the other, but you generally, 95% of the time is more than generally, don't stay under those Bollinger Bands. I'll tell you something I use during the day when I want to see how stretched out a market is. Pivot points. They're simple, and the odds are your charting software has it. You just may not know how to use them. What a pivot point does is it's a formula based on yesterday's open, high, low, close, and from there, you're developing these examples. The pivot would be typically in white. You'll have resistance points above the market. Most people use 2. You can stretch it to any number you want, but most use 2. FX traders can go 3 often. And they'll have support points, generally 2, but FX traders sometimes go further. I'm not a fan of going further than the 2. I like to stay where the mass is. And what the traders are looking to do is they're trying to find, has the market gotten to the point of a resistance to get back to that pivot, or does it get down low enough to come back up to it? I do something a little different. I created a video series on these for you, and I teach you how to apply slow stochastics with them to give you that edge during the trade. Is the market momentum moving ahead of price? If you'd like to get these for free, and they are for free, simply give us a call, 866-973-2077. Go to our website, and when you're on the website on the free offers, you'll see a host of other offers. Many of you if you trade stocks, you might want to take a look at my Spider ETF subscriber video. It's free right now. That's the one where I say buy here, sell there, do this, do that. You can also click up here if you're watching me on YouTube. It'll take you right there if you click that icon. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.